Crypto traders, how are you? Yep, this is Bitcoin. It's 15 minutes. It's a small time frame. We were watching it. We were very lucky to have traded Ethereum on the big sell-off, which we caught up here. So I'll come back to this later. We did manage to grab this Ethereum setup over here. That has brought us down to where we are today. Let's do it again. Here it is. We had a micro inverted HVF. I think I covered this with you, and it was bunching up against our grind line over there, and then in we were, and down to target it went. Then you got this bounce over here. Now if I drop down a time frame to something similar to what I'm looking at on the Bitcoin side, once again we saw Ethereum spill before Bitcoin, and then it led to Bitcoin. And I'm not saying Ethereum's the critical coin, but when people are wanting to exit crypto, there seems to be a big appetite for leaving Ethereum at the moment. Ethereum, as I've said before, is in trouble. For whatever reasons, it's in trouble in terms of technically, and it's going to lose out against BTC as well. That's another chart we could draw. Why don't we put it up? FBTC. So they're both going to go down, and one's going to go down relative to the other even more. If let's just have a pull him up. So we've had this chart on many times, and amazingly this is a clean chart on Bitfinex. But that was a key level of significance that we said, well, shouldn't be run, and if it is run, it's a very bearish thing. You've got quite a weak bounce, and then you got a turn and roll to the downside. And I've said to my premium guys, it's my suspicion that this is high probability for falling, and at the moment we're accelerating to that. So an Ethereum could become 0.02 to a Bitcoin that will be falling within its own right as well. So that's two slippery greased poles that monkeys are falling down. And one's on an even slipperier one is on the fast track elevator to the ground floor. So yeah, bearish, very bearish Ethereum, but it's going to be a crypto market cap thing. We've done a lot of crypto market cap analysis. We've warned folks this is not a healthy structure here that we got, and in fact it looks like at this very moment that this recent sell-off, this is the alt market cap, has literally just met the low of the rising wedge. So the alt market cap, since the bull market highs, hear what I'm saying carefully, since the bull market highs, and that was way back on 7th of Jan for the alts, since the bull market highs, when you had, without Bitcoin on its own, 555,000 million, so that's $500 million plus 55 billion. That was huge, and Bitcoin would have been the rest, of course, has now just run the extreme lows of this down selling leg after the rising wedge, pointing to more downside. The only thing I can say slightly optimistic is that we have made a big target from the original head and shoulder. This is the logarithmic view, guys. This is as nice as it looks. It's actually uglier when you take the log scale out of it. This will show you, the extent of that boom and that bust. Let's take the whole top out. This is what you're looking at when you don't look at a percentage view. My assessment is we're going to invalidate that upside HVF, which will confirm the long-standing blow-off overperformance upside HVF has now been undone over here, and that's not going to be a bullish thing for the market generally. So it looks like we're trading through. That's the alts market cap. The one with Bitcoin is looking like it's plumbing, wants to plumb a new low, but is a little bit further away. Why? Because this last low with Bitcoin is all over here. This alt made a new low over here while Bitcoin was holding up. So let's go back to the Bitcoin chart. So while we were watching Ethereum spill out of this structure, it was only around about here that Bitcoin started to roll. So you actually got Ethereum was the lead, the first to be dumped. You made that second interim, so let's just watch it on the 15 minutes. So this is a micro fractal. It's often these attacks occur on weekends as well, as I've said before. And I don't mean it to tax. If selling is going to be selling, there's not many active traders, and people are going to try to get out when they're looking at their situation and money or whatever the case may be, and they're deciding to jump when they're having the time to think about it and act on it. Maybe most crypto guys have a job, and who knows? That's speculation on my behalf, but it's got more to go, I'm afraid. If it's to be successful. So this is going to take you through the $200, and that's going to leave us open for more potential downside. But here's the rub of what I'm going to predict. My assessment for BTC is the following. The BTC setup. So I've shown this to the premium guys. They get it first as always, and they've also got a lot of things you won't be getting, but you can certainly take this assessment that I'm going to give you as one of what I'd call a very high value assessment in a potential trade. These two blue lines, dark blue, so there's light blue there, these two dark blue are what I call the key levels of significance of 7,000 and 6,000. This token has been bouncing off this and had a falling wedge. It eventually popped out of its falling wedge, but instead of a small return move, it did an entire return move and then a weak grind. So essentially we've set up a new inverted structure here with a low one there, high one there, low 2, high 2 here. And we are in the process of making a final, very flat bottomed low 3 in my opinion. It could also just spill and you could have had a very small fractal primer, which that's that small setup that we've been looking at on 15 minutes. But my feeling is the shorts are still very, very high here. That's the BTC longs. Let's get them, the BTC, that's the shorts. So the BTC shorts are quite high. I do, however, feel if this big sell-off comes, we could see new extreme highs that could run for quite a bit, because it's not really seen the panic sell phase yet, cryptos. And we've had that blow-off running market. And all of this was bull market history from September. And we don't have history on longs and shorts before then. So this is a short data set. It's not a big data set. And the shorts are coming off slightly. So they always come off at the wrong time, at the extreme after the break. Only the first bar here actually caught the move. This is why I think we're going to rally first. So a weak rally, you see this grey line, a weak rally may well be on the cards. So if I do this on a 2-hourly basis, just pull some of this through. There's a lot of analysis sitting in here. We have been setting up to break finally these key levels of significance of 7 and 6,000. And yes, some might say, well, you have dipped through them. We have dipped through them, respected them, and then rallied out of them on most instances. So the pattern that we're talking about is that final low as low 1. That is the lowest point that you traded, and that's where you inverted head and shouldered your way back out of the 6,000 and then the 7,000. Then you head and shouldered your way back down on this left shoulder, first inverted in a new trend, right shoulder, neckline, which is also where you failed at the neckline, and you made that target down to here, and then you sat again on this level, didn't quite go as low, but your weak grind is such a giveaway, and then you've spilt. And we were very lucky to have caught that Ethereum trade right there, and of course BTC went down with him. So this wind up, I suspect, is going to go here, but probably not run there. And everyone will think, whew, the downside is over for a bit again. And all the hodlers will breathe and say, oh, okay, now we can start coming back up. I think on that, though, we may come back up a little bit, but I don't think it's going to be particularly strong. And I think if we get our ideal finishing to this pattern, and that doesn't always happen, in fact it rarely happens, but if we get our ideal circumstance, these grey lines are in here to indicate a channel grind from wherever the lows are, like that. something like that. So I'll make that grey. And then we get a high in and around this zone, anywhere between 7,000 and 6,500 on maybe this key level of significance from the inverted head and shoulders neckline, maybe the 7,000 level, or maybe a bit before. But this does seem like it's going to be coming from a little bit lower now. It's made a fractal here, so we weren't sure if this was the bottoming or whether it was going to plumb for a little lower. It gave an inverted HVF fractal and plumbed a little lower. I had orders in there, so I did get filled for small bits, but I'm wary of those because eventually that low can come in and then it'll do this, and then it'll start getting the pumps and then the drifts to the downside. And that, if it occurs, could be the final bottom. This will give a very good low 3 final bottom from low 1, low 2, low 3, and that could be it for Bitcoin. When you get around here, the rollover sell could be quite brutal. That's my take of what may come next, and that was your breakout of your falling wedge over there. And falling wedges, we will be teaching a lot of interesting information on our next accelerator for that. But falling wedges just give you the squeeze and the breakout. They are not reversal patterns in crypto land. That's all I can say. So let's see if we make that target first of all. So it's going to be a run just about of the 6 ones, maybe just through, but not lower than the 5 8s. 82, 5882, and from 6106. So turning point somewhere therein. So if I was doing this on my surface, you would have a little zone here that you'd color in that would give you the ideal turning point for this, and it is busy selling off again a little more. Okay, so that's our prediction. And by the way, the target on that macro, let's just finish that while it's selling off and looking like it's going to run that 6-1. The target for that macro that we did was down here. That sees you run the 3754 level. Run the 3754 level. Yes. That. And that would be a major leave of this defensive area where the volume by price has highlighted consistently that the bulk of your volume. You see where it goes light and where it's dark. 70% of trade, guys, for BTC has been sub 8.9 down to the 6,000 level. 70% of all your trade is in that zone. We went up here on pure fumes. Poor dumb souls chasing the pump. There were 1 or 2 of them. There wasn't that much trade by volume over this period there. All the trade has taken place here, and it's accumulating in this falling wedge. This is called looking for the trapdoor and coming back and knocking on the floor. And what are you looking for? You're looking for that trapdoor that sees you tumble a couple of stories lower. And that's how it's looking for us here on BTC. Okay, I'm Francis Hunt. I'm the Crypto Sniper. We've got a free webinar for you with some great new content, free value. And you can pop on to the www.themarketsniper to watch that. And .com, and it'll be 18th, I believe, of this month. And by registering there, it's not for everybody. If you are up for trading, you want to know more and have your hand held, walk through this trade, you can see what we will be doing in our premium area and many others that I unfortunately can't give you rhyme and verse on. You can pop onto the webinar, do our short survey, and then decide if our community is one you want to be in. There will be gains to be made on the short side potentially, but as ever, we can always be wrong. And the way we'll invalidate that is we start making higher highs. By the way, something that just hasn't happened. I've reiterated many times that the big time frame bear is only over when you run that 11.8. Each low has got successively lower. Each low successively lower. Each low successively lower. You've been leaned across the top here. There's real distribution. Okay, bye for now, and thanks for watching.